Are you ready to learn a money secret that could take just $7,000 and turn it into $88,000 by the time you retire? Stick with me until the end, because I'm going to break it down in the simplest way possible and show you exactly how you can take advantage of the new 2026 contribution limits to supercharge your retirement savings.
Hey, real quick, before we jump into the video, please take some time to read the full disclaimer on the screen.
First, let's talk about why this is so exciting. Every year, the government sets limits on how much you can put into retirement accounts like IRAs, Roth IRAs, and 401ks. These limits just went up for 2026, and that's huge because it means more money going in now can grow into a much bigger pile later. But here's the kicker. Most people don't even know about this. They keep putting in the same old amounts, letting that potential growth slip right past them. So let's break it down in plain English. For 2026, the new contribution limit for IRAs is $7,000 if you're over 50. That's right. If you're 50 or older, you can contribute $7,000 this year alone. If you're under 50, the limit is a bit lower, but the principle is the same. The more you put in early, the more you'll have later. Now here's where the magic happens. Think of your contributions like planting a tree. Each dollar you put in today grows with interest over time. And thanks to something called compounding, your money doesn't just grow, it grows on itself. So that $7,000 you put in this year? By the time you retire, depending on how the market performs, it could easily turn into $88,000 or even more. You might be thinking, $88,000? That sounds crazy. But let me show you the math in a super simple way. Let's say you put $7,000 into your IRA this year. Assume an average annual return of 7%, which is realistic based on historical market averages. If you leave that money untouched for 30 years, the power of compound interest works like a snowball rolling down a hill. Year by year, it picks up speed. That's how $7,000 can grow into $88,000 over time. But here's a question for you. Are you using this growth strategy to its fullest? Or are you just letting your money sit in a savings account earning barely any interest? Think about it and drop your answer in the comments below. I really want to know what you're doing to grow your retirement funds. Now let's talk strategy. There are two main types of IRAs you need to know: traditional IRA and Roth IRA. With a traditional IRA, your contributions may be tax-deductible today, but you'll pay taxes when you withdraw at retirement. With a Roth IRA, you pay taxes today, but your money grows tax-free, and you can take it out tax-free after 59 and a half. Which one is better? Honestly, it depends on your personal situation, but here's a simple way to think about it. If you expect your taxes to be higher when you retire, a Roth IRA is usually better. If you want a tax break now, a traditional IRA can make sense. And here's another mind-blowing fact. Because the contribution limits have increased in 2026, you can now put in even more money than before and take full advantage of this compounding magic. That extra contribution might not seem like much now, but over decades, it's a game changer. I want you to pause for a moment and imagine what that extra $500 or $1,000 could do if it compounds for 30 years. Pretty amazing, right? Have you ever wondered why some people retire with huge savings while others struggle? The secret isn't magic. It's starting early, contributing as much as you can, and letting time do the heavy lifting. Even if you start with a small amount, if you're consistent, your money has the chance to grow far beyond what you might expect. And this is why knowing about the new 2026 contribution limits is critical. It's like a hidden shortcut to growing your retirement fund faster. Here's something else that most people miss. Many people don't maximize their contributions because they think they need to earn a ton of money to save. That's just not true. Anyone can do this. Even small, regular contributions add up because of compounding. For example, if you contribute the maximum $7,000 each year and let it grow, by the time you retire, it can reach tens of thousands, even hundreds of thousands, depending on your age and returns. And don't forget employer plans like 401ks. For 2026, the 401k contribution limit also went up. That's extra money you can stash away for retirement while taking advantage of employer matches. If your employer matches contributions, you're essentially getting free money to boost your savings. Seriously, not taking full advantage of this is leaving money on the table. Now here's a question for you. Are you already maxing out your IRA or 401k, or are you holding back? I want you to be honest and drop your answer in the comments. Think about it. This is the kind of financial move that could literally change your life. Okay, let's talk about a practical step-by-step plan to turn your $7,000 into $88,000. Step 1. Open an IRA or contribute to your existing one. Make sure you know the 2026 limits and don't exceed them. Step 2. Choose your investment wisely. This doesn't mean picking the hottest stock. It means choosing a diversified portfolio that has a history of steady growth over time. Think index funds, ETFs, or mutual funds. Step 3. Contribute consistently. Even if life gets busy, automate your contributions. Out of sight, out of mind, but growing steadily. Step 4. Let it ride. Resist the urge to pull money out early. Time is your best friend when it comes to compound growth. Step 5. Reassess periodically. Check your investments every year or so, rebalance if necessary, but avoid constantly chasing trends. Patience pays off. And here's the truth. Starting today is always better than waiting. Even if you can't contribute the full $7,000 this year, start with what you can. Every dollar counts because compounding doesn't care if you start with a little or a lot. It just keeps growing. I have a question for you. If you could start with $500 today, would you? Or would you wait until you have more? Type your answer in the comments. I'm curious to see what most people think. You might be surprised by how powerful even a small start can be. Here's a quick mindset tip. Think of your retirement account as your personal money-growing machine. The more fuel you give it early, the faster it grows. And because of these new 2026 limits, you now have a bigger fuel tank. How smart is that? I also want you to consider this. Do you know anyone who's regretted starting their retirement savings early? Probably not. But do you know people who wished they had started earlier? Absolutely. Don't be that person looking back years from now saying, I should have put in more when I had the chance. And before I forget, if you're finding value in this video, go ahead and hit that like button, subscribe, and share this video with someone who needs to hear this. Trust me, your future self will thank you. Also, comment below with your plan. How much are you going to contribute this year? I want to see your commitment, and it might inspire someone else too. Here's a bonus tip. If you're over 50, don't forget about catch-up contributions. These allow you to add extra dollars each year on top of the standard limit. That's an extra boost to help make up for lost time. If you're in your 20s or 30s, don't worry. You still have decades of growth ahead, but starting early multiplies the magic of compounding. Another important thing to keep in mind, don't stress over market ups and downs. Stocks fluctuate, but historically, markets trend upwards over decades. That's why consistent contributions, regardless of market conditions, usually outperform trying to time everything perfectly. Here's a thought-provoking question for you. If you knew that contributing just a few extra $100 now could change your retirement by tens of thousands, would you do it? Drop your answer in the comments. I want to see your honest take. Remember, turning $7,000 into $88,000 isn't magic, it's math, combined with patience and smart strategy. And the sooner you start, the more incredible the results. So, what's the takeaway here? The 2026 contribution limits give you a bigger opportunity than ever. Don't wait. Contribute as much as you can, start now, automate your investments, and let time do its thing. Those numbers aren't fantasy, they're achievable if you play your cards right. Now, before we wrap up, one last question for you. If you had a chance to see your $7,000 grow into $88,000 over the next 30 years, what would that feel like? Visualize it and drop a comment. I love reading your answers. They're motivating, inspiring, and might just change someone else's perspective today. And don't forget to like, subscribe, and share this video if you learned something new. Your future self is already thanking you. This isn't just about money. It's about freedom, choices, and the peace of mind knowing that you're taking control of your future. The numbers are real, the math works, and the opportunity is here for you. So, what are you waiting for? Take action today. Max out your contributions, harness the power of compounding, and let your money grow for decades. Turn that $7,000 into $88,000, or even more, because you deserve a secure, stress-free retirement. Now it's over to you. Comment below. How much are you committing to put into your retirement this year? Let's get a conversation started, share strategies, and motivate each other. Your future self will thank you for every single dollar you contribute today.